welcome. All right, we'll give it a few seconds before we hop in. Okay. Imagine if you could capitalize on the explosive growth in cybersecurity, and you didn't need insider connections or massive capital to invest in the companies protecting our digital future. You will discover today how cybersecurity has become a board-level priority, driving non-discretionary spending across 4 critical trends, from AI-native security operations to data trust technologies. Alumni Ventures has already established itself as a top 10 cybersecurity investor, giving you access to deals alongside legendary firms like Andreessen Horowitz and Sequoia. Investing in cybersecurity is about owning a piece of the infrastructure that protects everything we value in our increasingly digital world, while positioning yourself in one of the few sectors where demand is both urgent and inevitable. Now, we're going to pass this over to Lucas. So Lucas, over to you.
Welcome, everyone. My name is Lucas Pasch. I'm a senior principal on the investing team at Alumni Ventures. And I'll give another 20 or 30 seconds here for a few more folks to trickle in. Hope everyone is enjoying the start to fall and football season. I know I am. All right, let's kick off here. For those who just joined in the last few seconds, again, my name is Lucas Pasch. I am a senior principal on the investing team at Alumni Ventures. Now, if you're on this call, perhaps you're pretty sophisticated already and have spent time as a security engineer or architect or consultant, or perhaps you're just someone mildly interested in cybersecurity. Maybe you read the news this summer about the cyber attack on a grocery wholesaler that shut down the company's ordering system and drove empty shelves in stores across the U.S. Or maybe you read about Google acquiring a security company called Wiz, which was a company that barely existed a few years ago for $32 billion. And you decided that you are ready to learn more. Whatever your background is, I'm very happy that you decided to join us. I'm very energized about cybersecurity because, in my view, it is the most innovation-rich category in the enterprise today. So over the next 25 minutes or so, I'll cover the trends that are shaping the cyber landscape. I'll share why the sector is very critical and how we're positioning our investors to benefit from that. And then I'll spend a few minutes on Q&A at the end. A few disclosures here before we get started. We are speaking today about Alumni Ventures and our views of the associated investing landscape. This presentation is for informational purposes only, and it's not an offer to buy or sell securities, which are only made pursuant to the formal offering documents for the fund. Okay, so quick background on me here. I started my career in investment banking after graduating from the University of Michigan. Go Blue. I did 3 years of M&A at KeyBank, mostly sell-side advisory on middle market transactions. And then I spent 2 years studying entrepreneurship and venture capital at Kellogg, where I earned my MBA. Post-Kellogg, I had a couple of operating experiences. The most significant was building out and managing the business operations team at a growth stage health tech company called Let's Get Checked in the lab diagnostics space. We were running a tech-enabled services business, running testing programs for large patient populations managed by United, Cigna, Blue Cross Blue Shield, and other big payers. And now I've been at AV for coming up on 3 years, and what I've enjoyed most on this side of the table is really focusing on cybersecurity. I attend all of the sector conferences, meet movers and shakers across the space, host cyber-focused networking events, and really get to understand where the puck is going in this field. And I think that focus has yielded a few great investments over the past year for us, and I'll dig into the logos you see here at the bottom of the slide in just a bit. A quick word on AV, kind of zooming out a bit. We were founded to give individuals access to a diversified venture platform. Today, we are one of the most active VC platforms in the U.S., with offices across the U.S. and with over $1.5 billion in capital raised and invested in over 1,600 plus portfolio companies. We have been recognized as one of the most active and top performing venture funds in the world. We are very proud of our accomplishments and couldn't do it without the 11,000 plus investors on the platform. So thank you to those here that are already part of this journey and for those that are interested now in joining. And just quick note on this slide, it didn't make it into the slide, but a couple of weeks ago, Time published a list of top venture investors, and Alumni Ventures cracked the top 20 alongside the household names you probably know. So, look, that's a recognition that is by no means why we do this work, but as you are considering how to allocate from your personal portfolio, I think it's worthwhile for you to know this stuff. Now, the way venture deals are done is a lead investor underwrites a funding round for a company, and they are pulling together a syndicate of other investors who are also writing checks and participating in both the risk and the upside opportunity. That's where we come in. We are co-investors who work with the tier one lead investors that I'm sure are household names to some of you. Now, here's how the Cyber and Trust Syndicate works. Our investment team members are pulling together diversified funds today. A fund might have 20 to 25 deals in it spanning cybersecurity, health tech, AI infrastructure, robotics, space tech, fintech, and more. But perhaps you are really interested in cyber in particular, and you want to see the cyber deals we are putting into our funds across the platform. That's what this is. You will see the same cyber deals that we are doing in our funds, perhaps one or two carefully curated opportunities per month. We share our thesis, our diligence, our market work, and then ultimately investing is totally optional. So if a deal resonates with you, you can participate with a $10,000 minimum check and start building a personalized venture portfolio over time. So think of this as the same institutional access as our funds, but with more flexibility to invest in the opportunities that you like. So if you're interested in that, scan the QR code here, or you could go to a landing page listed here and you could sign up. I'll have this flash on the screen for a longer period of time later in the presentation as well. Now, let's dig into cybersecurity and what we've done in the space so far. While this cybersecurity and trust syndicate is brand new, our work in the space and the deals that we've been putting into our portfolios over the last 10 years, that is not new. AV is already one of the top 10 most active venture investors globally in cybersecurity and trust. So what that means for you is simple. If you want breadth of exposure across this category, from identity to data to application security, you're going to get it here. And the exciting part is that cybersecurity doesn't plateau the way some other areas of tech do. It keeps creating fresh categories as new problems emerge. So unlike, project management tools where the categories are pretty well defined, cybersecurity is constantly spawning new problems and therefore new markets. So 10 years ago, for example, no one was talking about cloud workload protection or AI model security. Today, those are billion-dollar categories. So every shift in how we build and use technology, cloud, mobile, SaaS, AI, that creates fresh attack surfaces from new threat actors that require new defenses. And so that means that there's a steady pipeline of opportunity for startups to step into. That's why you see such a diversity of logos on this slide here. So I'll spend a little bit more time on this slide. So I mentioned up front when I was talking about my background that I'd share a little bit more about the few of the deals that I've sourced for the AV platform recently. In part security you see here on the left-hand side in runtime application security. That's actually the most recent one. We just participated in the Series A round that was announced at the end of Q2. This is a company that's helping customers like Policy Genius and FanDuel and many others replace outdated firewalls with kind of a faster, smarter runtime application security product without causing any kind of latency for end users of the application. And that last piece is really important. That's been very hard for security practitioners to achieve. We got access to this deal after building the relationship with the founder for the last 18 to 24 months. And we co-invested in this one with Karan Mahandru at Madrona Ventures, who was the seed investor and longtime board member of Auth0. If you know Auth0, that is a cybersecurity company that sold to Okta a few years ago for $6.5 billion. Karan is very knowledgeable of the space. He was really excited to take a big bite of the apple in Pasch Security, and we're thrilled to be joining Karan there. Another one here is Trustable. You'll see that on the left side as well in the enterprise compliance bucket. Trustable offers a purpose-built AI governance platform that is helping enterprises manage compliance and risk and regulatory requirements as they scale their AI adoption. This one is early, and since we closed this investment around the end of Q1 of this year, they have doubled their annual recurring revenue in just a handful of months. Industry folks are very excited about what they've rolled out. Even customers who have not purchased their product yet are looking to them for advice on how to roll out AI to their organizations in a compliant fashion. And as those customers get more sophisticated with their AI adoption, they intend to adopt Trustable to help them manage that effort on an ongoing basis. So AI governance is a small category right now. Our bet is that it won't be in a few years, and Trustable is positioned super well to capture that trend. Again, this is one where we've been building the relationship for a long time. I met the founders, Gerald and Andrew, about 2 years ago before there was any product in market. I stayed close to their progress, dispensed advice, where it made sense. And when there was an opportunity to invest after they gained significant traction with prospective customers, we jumped at the opportunity to do so. I'll do one more here. So Unixi, on the left-hand side as well in the personal identity security bucket. This is a company that is making logging into work applications safer and easier by eliminating passwords and offering one-click access across all software, even the ones that some of the traditional systems like an Okta that a lot of people have heard of. Okta misses some of the perimeter here. We co-invested in this company alongside our friends at Hyperwise Ventures. These are hardcore cyber experts in Israel. We also co-invested with an angel investor named Shlomo Kramer. This is the founder of Checkpoint, which is a $20 billion market cap global cyber business, as well as the founder of Cato Networks, which will probably go public in the next year or two. So we are proud to continue to building that co-investment relationship with Shlomo. All right, so let's dig a little bit more into a high-level view of this cyber category. In our view, cyber really sits at this intersection of necessity and opportunity. What do I mean by that? So on the necessity side, when I think about investing in this category, I try to put myself in the shoes of a chief information security officer who tends to be the key buyer and champion for these types of products in the enterprise. And I compared that role to the chief revenue or commercial officer or the chief marketing officer or the chief product officer. And look, you can delay a CRM upgrade or cut back on ad spend when budgets are tight, but you cannot ignore the fact that a single breach can cost the organization hundreds of millions of dollars, or in some cases, sink your business outright. So that existential risk makes cybersecurity non-discretionary spending. And that's why the market has remained resilient through multiple downturns. Even in 2022 and 2023, when tech funding slowed dramatically, cyber really held up, and that's because of the necessity for these products. Then there's the opportunity side, and that revolves around kind of what I discussed on the last slide. Every technological innovation in the enterprise expands attack surfaces and generates new risks for the organization. These risks are systemic and they demand systemic solutions. So this year, as companies are getting smarter around both protecting against AI-related threats as well as deploying AI to fight those threats, cybersecurity funding has already blown past last year's total. Like, so we're at over $14 billion raised by cyber companies before Labor Day this year. And that is what I mean by opportunity. And ultimately, like, where you have, necessity and opportunity, you tend to have big outcomes for investors. So Google's $32 billion acquisition of Wiz, Cisco's $28 billion acquisition of Splunk. These are signals that the largest tech companies see cyber as strategic and are willing to pay up to fill gaps. So for our investors, the excitement is twofold. One, you're backing companies that are literally protecting the digital economy, and you're doing it in a sector where demand is growing, exits are large, and innovation is constant. That's a rare combination of traits, and it's why we see cyber as one of the most compelling investment opportunities of the next decade. Okay, so actually, let me see how I'm doing on time. Okay, we're doing all right. So I want to peel back the layers of the onion a little bit more here. So let's talk about some key trends that we're looking at in the category right now. So first is AI native security operations. You go to events like Black Hat in Vegas last month and RSA in San Francisco in April. Like, this is the talk of the town. Security teams are overwhelmed. There aren't enough skilled people, and even the best teams cannot keep up with the thousands of alerts that they are getting from all their security vendors today. Humans just aren't built to spot and respond to AI-powered attacks at that scale, and we need AI to fight AI. So legacy systems like legacy SIEMs from IBM or ArcSight or other vendors were built for a different era, and they can't keep up with today's cost and data volumes. So what's emerging instead is this new generation of AI native platforms that can ingest massive data streams, detect anomalies, and take action in real time. So for investors, this is, some people view it as like a true category reset where incumbents are exposed and new leaders are being built right now. And I apologize for not flipping the slide here. So now you could follow along. The second bucket that we're looking at is identity and access. In 2021, the Colonial Pipeline attack caused gas shortages across the east coast of the U.S. And about a month later, investigators revealed the cause of that was hackers got in through an old VPN password, and there was no multi-factor authentication. It doesn't take a cybersecurity professional to know that is a massive gap in our infrastructure. And so this is why identity has become the new perimeter, with remote work and cloud sprawl and even AI agents acting on our behalf. The critical question isn't just like, is this person like inside the network? It's like, who is this person inside the network really? And should that person be allowed to have access to XYZ within the network? And at the end of the day, trust online starts with identity, and getting it right is one of the biggest opportunities in cyber. All right, third bucket here, application security. Almost every company now in some form is a software company. Every piece of software is a potential target. AI-generated code is actually making that problem worse. Vulnerabilities are multiplying faster than humans can patch them. There's this trend right now where CEOs are telling their software developers that they must adopt AI, or they are going to fall behind relative to their competition and eventually die. And they're saying this in boardrooms, sitting next to their chief information security officers who are looking back at them saying, hey, we really don't know how to secure AI-generated code yet. So this has led to a recent explosion in application security investment, and I think we're going to see a lot of great innovation there in the coming years. Fourth bucket here is the rise of data trust. Look, as AI kind of eats the world here, the critical question becomes, can you trust the data that is feeding the AI machine? In the third bucket, I talked about securing AI-generated code, but what about the data that feeds into the AI model that generates that code? So I was at the Black Hat conference in Vegas last month. I spoke to a founder there who spent 8 years at NSA and US Cyber Command, and he's building a business now around this theme. His thesis is that you need to harden the data sets and data lakes before you train or deploy a model. For the DoD in particular, that's mission critical because you can't just say, "Oh, we'll catch it at inference for the model." You need to prevent poisoning and leakage up front. So, look, that was a little bit in the weeds. Happy to spend more time on some of these themes on further calls. Hopefully, this gives you an idea of where we think the industry is heading. These 4 themes are by no means collectively exhaustive. But these are some of the things that we're thinking about and excited about in 2025. So when we evaluate cyber startups, one of the first questions we ask is, what is your moat? And in other words, what makes them defensible and difficult to displace once competitors inevitably crowd into the space? Unlike consumer technology where a catchy brand or a viral loop can build momentum, cybersecurity is a little bit more fundamentally about trust and execution and deep technical advantage. So let's break this down a little bit. So first thing we look for, proprietary data and network effects. The more signals a company ingests, the smarter it becomes. Think of this like a flywheel. More customers create more data improves the detection, better detection attracts more customers. CrowdStrike did this exceptionally well with their Falcon platform, and this is like the classic example in cybersecurity world. Every endpoint that they protected made their defense sharper. A startup that can spin up that kind of data flywheel in a new area of cyber can build real durable defensibility. Second bucket here, embedded workflows. There are good tools, and then there are tools that teams literally can't live without. When a product is woven into the day-to-day workflows of security analysts or software developers, it becomes incredibly sticky. So rip and replace in cyber is like open heart surgery. It's costly, it's painful, it's avoided whenever possible. And that's why we look for products that integrate very tightly with today's workflows and that expand in usage over time. Third bucket here, architectural advantage. Some moats come from being built on the right foundation at the right moment. Legacy tools like Splunk, for example, were giants, but I'd argue that their architecture is actually straining a bit under today's data scale and costs. And that creates a window for new entrants to re-architect security operation centers with a more cloud-native pipeline and AI-first analysis. So when these architectural shifts happen, they tend to create generational companies. Think about Snowflake in data warehousing, or even, for this context, Wiz in cloud security was in the right place, right time for a new architectural moment. And so that's some of the things that we look for in that category. Regulatory and compliance. Okay, so cyber is primarily about stopping hackers, but it's also about satisfying regulators. Think about HIPAA in healthcare and PCI in payments and GDPR in Europe. Every industry faces compliance requirements that create pain points, and if a startup can turn those headaches into some kind of streamlined workflow, they become indispensable. So this is actually a big part of our thesis around Trustable, the company that I talked about before, that is helping with AI governance and compliance. As state and federal regulators begin to trickle out their guidelines around AI adoption, Trustable is going to become indispensable to those organizations. So then finally, let's talk briefly about human capital. At the end of the day, cyber is a trust business. Chief information security officers are betting their whole reputations on the vendors that they utilize to secure their organization. So leadership of these companies really matters. Startups that are run by operators with pedigrees from the NSA or from Unit 8200 in Israel or big legacy cyber business, that often brings instant credibility. So you combine that with strong reference customers early on, and trust itself becomes a moat that you can rely on. So hopefully these last couple of slides have provided a nice window into how we seek out and evaluate opportunities in the cyberspace. All right, let's do a quick time check here. All right, perfect. I've got a little bit more, and then I'll flip over to questions. Lost my slide here. There we go. All right, so I'll just reiterate here what I discussed before. This is what I view is your opportunity to join the Cyber Syndicate and invest $10,000 or more into individual deals. That investing is completely optional. But if you sign up, you'll see 1 to 2 curated deals per month in this space. Like I said before, you're going to see all of our thesis work and our diligence work. And I think that this is a great avenue for folks who are interested in picking deals they want to participate in and really want a good feel for the types of deals that we're doing within the sector. So with that, I will flip it over to questions. And I'll just keep this slide on the page so that if you need more time to take out your phone, scan the QR code, you could do that. Let me just see if things that have come through the chat here. Okay, cool. We have a few questions here. So who is eligible to join? How do I know? Great question. So you must meet the SEC definition of an accredited investor, and we can help verify that status during a very simple and easy sign-up process. So just go to the QR code. It takes 2 or 3 minutes to complete this, and then we could help you through that very quick evaluation if you meet that SEC definition of an accredited investor. Let's see. Can I invest with my retirement assets? Yes, absolutely. Actually, about 1/3 of our investors choose to invest with AV through a self-directed IRA. So if this is of interest to anyone on the call today, just reach out, and our community relations team would be happy to assist you throughout that process of the self-directed IRA. How do you compete for allocation when Sequoia and Andreessen Horowitz also want large positions in the best cyber deals? Okay, great question. Look, Sequoia, Andreessen Horowitz, NEA, 8VC, Founders Fund, Khosla, all of these big shops are still pulling together syndicates to share in the risk and the upside for these transactions. It's very rare for them to take down a whole funding round by themselves. And so how do we get a slice of these deals? It's a few things. One, it's good old-fashioned relationship building with those firms. We have built these relationships over the past decade. And in that time, we have proven to these firms that, while our diligence is quite rigorous, we are also able to move through our process exceptionally fast and not waste anybody's time, which in our industry is very valuable currency. And two, we are extremely value add post-investment, and we can discuss this in much greater detail on another call. But we have a vast network and an in-house CEO services team that opens a lot of doors for our portfolio companies. And the more we do that, and the more lead investors see us doing that, the easier it is for us to win our way into other competitive funding rounds. The other thing I'll mention is that Sequoia and Andreessen Horowitz, the two examples they provided in the question, are they're not like the only ones with the key to the round. We build relationships directly with founders as well. So, again, like I was in Vegas, meeting founders nonstop for a week at a big cyber conference last month. I was at RSA in April. I'm meeting with new cyber founders every single week and building relationships directly. And they are a big decider of who they let into their round as well. And if we build that relationship strongly enough, they tell their lead investor that they want to make space for us. So that's a very key part of the avenue as well. Okay, let's chug along here. Not sure if I want to pick my own deals or join a fund. Can you share a bit more kind of about each strategy? Okay, so that's a great question. There are some fundamental differences between those two strategies. If you join a fund, you are entrusting Alumni Ventures, my colleagues and I, to actively manage your capital. You write a check and we pull that check into a fund that will probably invest in 20 to 25 companies. That is you saying, hey, I want exposure to the venture asset class, but I'm not interested in diving into each individual deal. You do it for me. So that's how you think about investing in a fund. In lieu of that, by joining the syndicate, you get to see specific deals that we do. You don't have to invest in anything. You can just sign up and see those deals, double click into them and learn more. And if you are compelled to invest, you can invest. And if you do a bunch of those, you are effectively pulling together your own personalized portfolio of venture deals. And in the scope of this syndicate, you are choosing to look specifically at the cybersecurity deals. So, I could unpack that much further. There are pros and cons to each route, but at AV, we want to provide those flavors and kind of let our investors decide how they want to pursue the asset class. All right, quick time check. We're right at time, but I'll just take one more here. How do you balance your portfolio across such a broad cybersecurity landscape without being overexposed to one theme? Okay. It's a good question, and I would say we do it by staying very close to the ecosystem. So we're at those big industry events, we work with Gartner, we hear what problems are keeping security leaders up at night. We lean on our investor network to talk with CISOs and former CISOs and security consultants and security architects and engineers who give us the ground level view of what tools are actually getting deployed. And also, again, like what keeps them up at night. And because we're often investing alongside top lead investors who eat, breathe, and sleep cybersecurity, we benefit from their thought leadership and pattern recognition as well. So that combination, industry immersion, feedback from operators, feedback from top tier co-investors, that helps us diversify intelligently across identity and application security and data security and AI governance and next-gen SOC operations, instead of betting too heavily on any single slice of cyber. So hopefully that gives you a feel. Okay, we are over time here, so I'm going to cut it off there. Thank you so much again for joining today. I hope you do sign up and choose to learn more. Would love to spend more time with each and every one of you who are interested in learning more. Take care and have a good rest of your day.
Okay, Lucas. Awesome. The digital world isn't slowing down, and neither are the threats. But behind every risk lies an opportunity to invest in the defense systems that will shape the future. Thank you so much for joining us, and if you're ready to secure your stake in the companies safeguarding tomorrow's digital infrastructure, scan the QR code or visit av.vc to get started. And as always, we will see you next time.